Hi, welcome to this video, Dave, which is on the 27th of June. It's Sunday. It's our weekly Forex forecast. Just going to pick out some pairs which we think can offer really good risk-reward trading opportunities for the week ahead. And we'll go over the charts in just a moment. We've got quite a few pairs to look at this week. Now, in terms of just before we look at the charts, obviously, please do keep in mind, it is my view as of right now. It could, of course, change in line with the market action and conditions. If you want all our trading techniques, our daily technical and sentiment analysis of 14 FX pairs, all you need to do is click on the link beneath this video and you can get live access to our member center. You can also follow us on Facebook, join our Facebook group of traders and check out our recommended regulated ECN broker. I'm going to do USD pairs first of all, and in relation to getting clues to where the USD could go next week, we need to look at inflation data and the Fed. So just quickly want to look at some charts in relation to inflation and the Fed before doing the FX pairs. I've just been doing some updates for our member center for the weekend. So I'm just going to use the charts from there. So let's go and take a look at them. Right, we're on the first chart, which is basically not a chart, but a picture. Sorry, it comes from the Bank of America. It clearly shows inflation getting out of control. Now, in terms of the market, they think that the Fed have said in the past, yeah, inflation is transitory, it'll fade, okay? And the Fed have said, they want to provide ample stimulus for the economy, okay? So money printing, basically. But inflation is permanent, it's not transitory, and the Fed are actually changing their view. Now, in terms of this chart, you've got inflation at 8% in 2021. It's from the Bank of America. They, as they rightly point out, averages 3% past 100 years, 2% 2010, it's 1% 2020. It's now up at 8%. And they say it's so fascinating, so many deem inflation transitory, and stimulus, economic growth, asset, commodity and housing inflations are deemed permanent. So the Fed do have to act, okay? Our market just doesn't see them doing it, okay? But if you look at the Fed, okay, these are participants who see inflation risks to the upside. The number has soared, okay? Here is another one. Again, on the inflationary problem, US economy, this is from Dallas Fed President Robert Kaplan, will likely meet the Federal Reserve threshold for tapering its asset purchases sooner than people think. He's actually penciled an interest rate increase for next year. Another Fed president came out, I think it was yesterday or on Friday, was it Rosenberg, who said that Fed have to be really careful about inflationary pressure. He was going on about the risks. You've had, I think, Bullard talk about inflation might not be transitory. I think they're changing their view. Stimulus will get cut back sooner than the market thinks, and the US dollar will rise, okay? It did sell off a little bit last week, but I think that sell-off is a buying opportunity. So let's go to the first pair I want to look at, which is Euro USD. Now, in terms of the euro, we had a big fall. We got nice entry at 122.20. Got oversold here. We've bounced back a bit. It's kind of a natural retracement in our view. 120 is a big level, okay? And for anyone fresh coming in the market, I would sell weakness through 119 with a stop back behind 120. You can see where ours is, 120.40. We should get to 117 and then follow on to 116 weekly support. And I personally think we might go even lower. Just bring up the weekly chart down to 114, which is a big, big support level. Okay, if we take the outlook in the US, stimulus is going to be cut back in the next few months. In our view, ECB are nowhere near cutting stimulus. They can't. Growth favours the US economy over Eurozone as well. So I personally think the euro, the bounce is a selling opportunity. If we were to get stopped out, okay, we just sell back through 120 and have our stop back probably behind 121, okay? So we'll see where we go. Now, in terms of the next pair I want to look at it's going to be AUD
Right,
chart of
USD.
AUD USD, and in terms of here we have kind of messy sideways price action, then we get the full, get to oversold, and now we have a natural retracement. Okay, go up to the 76 level. I think the 76 level now will hopefully be hard to take out, and basically looking for a big move down, ultimately or longer term to 70, so near enough 600 pips. That is a longer term target. Now we have popped our stop just behind the double trend line, just to lock a bit of profit. If we were taken out, we would look to sell back to 77 or 77 to hold the rally. Personally, I think if you want to come in fresh, 75.50 would be an aggressive entry, or you could wait for this double bottom to give way, which is support on the monthly chart. I just want to show you the monthly chart. There's the big sell-off from 70 with the pandemic, spike low, then speculators buy heavily. We break above 70 here, come back to test it, test it, test it, push off again, and now we're really struggling. There is obviously the monthly low. Okay, that gives way down to 70. I think in terms of the Aussie, key driver of the Aussie going forward, obviously we're bullish, not bullish, we're bullish, yes, we're bullish of the USD because we think the Fed will act quicker than the market expects. But this commodity also very important in terms of the Aussie dollar. It's iron ore, 45% of exports. It's accounting for the current account surplus. It's just a bubble. It's had a parabolic rise, best performing commodity. Chinese demand has peaked. Speculators are heavily long. They're going to get taken out on stop. We're looking for 160 and possibly a move all the way back to 120. That will really weigh on the Aussie. But what we can say in the last few months, obviously Aussie's really not moved higher with iron ore. It's actually gone down. So if iron ore has a big fall, that will further weigh on the Aussie. So looking for a turn down. Next pair, USDCAD. On the chart of USDCAD, and this is one of our favourite long positions. We were saying last week that got a good entry in at 121.30. We surged higher. Then we came back, got stopped out at 123.70. We've run on a little bit to the downside, but we've come back in at 123.30, came in on that blue candle. Volatility has dropped, got good support here in my view. And then key support is the 122 level. So looking for more upside to 126 than 128. And what I still like about this setup is what speculators are doing. This is the COT traders positions, and in terms of this tool, if you're unfamiliar with it, you can just look up our video COT net traders indicator. But what we're really looking for is divergence between commercials, their hedgers, their smart money, large speculators. Okay, now in terms of turning points, commercials will normally be right, the speculators will get caught out. Now this chart is Canadian dollar v USD, so it's the other way around. But what you can see in terms of the positions is, look at speculators holding still a year high or near a year high in long positions. The hedgers have covered some short positions, but not many. Divergence is still big. There's still plenty of speculative stops to get hit. So that gives us our targets. And previous COT divergences like the one we've just seen would indicate another few hundred pips the upside, 126. I think we might even get to 128. Now, in terms of commodity that's important for the CAD, it's crude oil. Look at that for a rally, and now we're coming up to the 75 level. This is the monthly chart, okay? Can we break out above it? If we do, I don't think it's going to help the CAD too much, but if we break here into this big resistance level, that will put additional pressure on the CAD. So basically more upside ahead. Let's take a look at just a few more USD pairs and then move to some crosses. USDCHF, and it was a really nice downtrend, but that's ended in our view with those big blues. And looking for a big rally to the upside, chart highs and onto the par level. The fundamentals are really favour the USD. I'll post some notes on the fundamentals on my Facebook page tomorrow, which you can check out. But after the big rally, just a little bit of a red fall there, and then 4 little candles going sideways, coming through 92.20 in my view. If you're bullish, just stop back behind here. You see my level 91.20, and look for follow through. Not the fastest moving pair, but it does trend really well, and I think the USD is going far higher. Next pair is a Euro proxy, which is going to be USD Polish Zloty, USD PLN. And say it in most videos that I discuss the euro correlated currencies, that they very often offer you better risk to reward than the euro. Why? Because if the euro goes up strongly or goes down strongly, the proxies very often move quicker. So you get an enhanced risk to reward, and also you don't have the choppy price action you get in the euro, the noise. And yeah, euro most traded currency, a lot of institutions trying to pick stops off and create some volatility. Yeah, so you don't get the spiky action so much in the proxies. This one, but really nice trade in through this on this blue here, follow through nicely for us, get stopped out, come back, found support here. I think this is big support, just coming through the 381 level, up to chart highs, then on to 420. Okay, so we'll see what happens to this one. Other proxies look good as well. This is just my particular favorite. Okay, next pair I want to look at is another pair we've stopped out of since last week, is this one, and we had a nice entry above the 1350 level. She went to the upside, then she came back, and I made a mistake with my stop. I put it at 1402. I should have put it the other side of the round number. Okay, I think the low was 1401, but basically we have exhausted back up. They were red on the day, I think, just through this level here, and then we should rally up to 15, then 1550. And in this pair, you've got quite a big speculative long rand position, short USD, which you can see here. Yeah, it's been building up over the last few weeks. Hedgers, the commercials, short against them. It has been, I think, the strongest major over the last few months against the USD. If it isn't, it's one of the strongest. I think you get a broad-based USD rally. Emerging markets get hit hard. So, yeah, I'm looking for continuation of the uptrend, just a retracement. Right, so we're on our last USD pair, which is USD RUB, US dollar obviously against the Russian ruble. And you get big move to the downside. What I quite like about it is the tail action below 72. Come through the level, close above. Again, close above. Again, close above. Again, two tails nearly reach, but don't touch. This one does. We finish blue. I think through here is a good level to come through, 73. In terms of the RUB, it has benefited from strong commodity prices, particularly crude. Also, the central bank hiked rates. And speculators have responded by selling the USD hard and buying the RUB, which we can see on COT net traders positions. There they come in. Speculators a really big long position. Commercial hedgers drop heavily short against them. So looking for this to potentially now hold on a close basis and us to go through this level here. And yeah, up to 76 to take out the large speculative short position. It is a volatile pair. It's a minor pair. It's only a small position, but I think, yeah, it looks a good risk to reward position. I think the selling could be exhausting. If we go through the level, that negates the trade. We shall see. Now let's go and take a look at some crosses and some yen crosses. Right, first yen pair is EURUSD, and in terms of the JPY, we expect it to firm up if the USD firms up. Yeah, speculators very heavily short of the yen, and in Euro JPY, I've got a big Euro long position, which you can see on the COT net traders positions. Now, in terms of this pair, we did fall heavily. We got that fall, but we gave back way too much profit. Got stopped out in this blue. Then we did follow on. Then two little reds. This resistance level here, 133, I think is strong. Got minor resistance here and on the trajectory. go through here, then back to 130, then on to 128. Okay, so it looks a decent risk to reward trade if we get the entry. Let's have a look at a couple other yen pairs. This is AUD JPY. No, it's not CAD JPY. I want AUD JPY first. I'll get a CAD JPY in a moment. In terms of the AUD, tumbles over. Nice short trade in this one for us. We got stopped out as we came through 83. Then we really followed on to the upside. 2 candles stalling, 2-day moving average and a double trend line. I'm just looking for a move back through this low, and then looking for a move back to 82, possibly on to 80. The stop is at 85.40. Sorry, I didn't draw the level in here. That's where our initial stop is going to be. But if we gain traction to the downside, I'll just bring it down behind this double trend line. Okay, CAD JPY. Biggest short position against the JPY is in this pair, and we did roll over to the downside but bounce. Now 3 small little candles here. I think this double trend line will be very hard to take out, the size of the long CAD position. Just looking for a move clear of these bodies, then hopefully 88 again, and then on to 86. So 3 yen pairs, which I think, yeah, if we get the entries, should offer good risk to reward. Actually, if, yeah, obviously, well, not obviously, but if the Euro, AUD and CAD move higher, we will raise our short entries probably. Now I was going to cover some more pairs in this video, some more crosses, but I've actually run out of time. So I'll cover them in a video tomorrow or on Tuesday. But in terms of USD and JPY, we'll see what happens next week. But in our view, plenty of trades that offer good risk to reward to choose from. Right, that is the video for today. Thank you very much for watching it. Take care and have a good day.